Hello, everybody, and welcome to the Plus3 Futures and Commodities Thanksgiving Leftover Show. It's Monday morning, November 28th. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. How you doing, Barry? Did you awake from your turkey-induced coma?
Just getting there. Monday morning, it's good. It's good. It was a needed break. So,
Absolutely. Well, we're going to do in this show, we're just going to do a really quick run through the big five with Barry and NQ here with me because NQ is really interesting from the standpoint of where we stalled, where the high came in. We had a couple of weeks ago, I pointed out, we did a low to high of 23 trade dates. Here we did a low to high of 23 trade dates. And we've since, chopped around. The key thing here is we're getting stuck under. We always talk about, get on top, get stuck under. We're getting stuck under this upper part of the square here, this full square. I'd call it 11,009. And at that level, below there, the next magnet is to come down to here for the half square. And it's in about 11,280. So until we can get above, stay above, I mean, here we pushed above, tried multiple times, 1, 2, 3, had this big bar above. 4 days there, couldn't make it. And here we 2 days. So below this full square, you gotta think we're gonna test the half square at least.
right.
So it's not in a bullish position right now on the Nasdaq. Anything else you got to add on this one?
Well, I'm going to cover the S&P, and it's similar, not obviously not exactly, but it's a similar kind of thought pattern. So I'll cover it there. But obviously the upper square is the key here. We can't get through it. Obviously, we're gonna not much else to do other than to go check the half square. So.
Exactly. And the other thing to keep an eye on in markets and just in general, as you're observing what's happening, we had a cycle hit on Sunday, and it's time to watch and see, okay, what percentages have changed, what behaviors have changed, and take note of that in the price action charts, take note of it in the news, take note of it as what becomes prominent and what are people focusing on, because it's a time that these sort of things matter for picking up. Okay, what are the effects of the cycle and what's going to happen? So let's throw it over to you, Barry, and let's quickly run through the big five and see what's happening there.
All right, just to bring everybody up to speed, we squared out at this high on the 15th of November, and we had a couple of day downturn, rallied back up, and we ended up with a bit of a false break, right, Ben? And right at the quarter of the square. So I'm just kind of go through my thought process here is, we had a big cycle expire on the 30th. Then we had another, not as big, but big enough to cause some kind of a correction on the 15th. And this is all we have to show for it. 2 days down, and we have 1, 2, 3, 4 days up without counting the 1 day counter trend. And we're very far from the 50% line. So let's keep that in mind, right? So moving forward, the deal here is, are we going to move higher and check out the 90? Or did this cycle cause something where we're going to just turn down for a while? Or is it something in between? Now, these kind of moves happen a lot. Without the rest of the pattern being here, it's hard to imagine which way. So, you can make a case for it to turn down. You can make a case for it to trade higher. But if you look back, without even going back years and, 10, 20 years, if you just look back in the recent past, this year, you can see, we had a high coming here, market sort of mess around, false break, and then we had a sort of what we'd call a normal correction, and then an ABCD back up. And here we had a high that seemingly that came in, had one day down. Second day, we made a new low and an outside reversal back up to put in that final false break. So here, you know, 1, 2 examples. And here's another one where we went in for the high, came back a couple of days, went back to sort of retest it. No false break there, but then we turned down. So it happens often. So we have to keep an eye on that. They're not always clean turns like this. So the other ones get mixed in. So the way to trade this would be knowing that we had a cycle at the low and knowing that we had a cycle at the high. You have to be a little careful here, and you really have to go with the levels. So let's go back to our back to the daily chart and see how we can figure this out. So last couple of weeks, we've been working with this 39.40 and 40.38, basically 100-point range, right? And we've been locked in fairly well into that. And this is showing without sort of the overlay of the cycles. So if we just take the price action here, you can see, you know, we came up and we broke through the 39.40, went to 40.38, came back to test the 39.40, back up at 40.38. All right. So at this point, now what? Now it's very possible. Pardon me?
It's trapped.
Oh yeah, exactly. So this point, it's either trapped between these two levels, or it's going to have to obviously take one out. I mean, that's just, I mean, not a lot of ways to slice this thing. So what I want to share today is, I mean, all that to build up to this little 2 sentences is basically that because we had a high come in, a cycle expiring here, and this part is, you know, if you can call it just the market, you know, messing around till the final direction is chosen. We have to really keep an eye on the levels and knowing what the levels were when the high came in. So a high came in right around 40.38, and we had timing there. So the case from here on is if it's between these 2 points, you guys can do the short-term trading. And I know took a poll the other day, and we had a lot of people trading the short-term and off 5-minute chart. So, you know, here's your bracket, the bigger, very big bracket, and you guys can trade between that. Now, if we get above 40.38, I think it's really going to change things in a big way, and we could get a big run up into early part of December. And the reason being, when cycles come in like this, and we get sort of a shallow reaction, and the market's, you know, sort of stubborn, hangs around there, and he's hanging right around that 40.38, right? Bump, 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 bump. Now, if we manage to get above that somehow and settle above these highs, or even settle above 40.38, I would expect it to go higher, right? And at a minimum, do another 100, and it seems to be that's in fashion. So do another 100 and check out 41.40. And at that point, we have to remember we'll be above the half square. So it's, you know, this is going to be all, you know, crowd's going to be jumping into this. And that would take us up to, well, this is 1/3 of a 90, but we can be quite a ways up. Let's just go back to the 90 square first a little bit. So 50% would be right in here, which would be 90 down. So this is the next thing. If we take this out, and I mean, if we really get up to test 41.40, that means we took out the 90, and settling above that level, which is around 41, let's say 85. Well, that opens up another potential test of this high. So the whole scenario is going to unwind to the bullish side if we take out this 40.38, we settle above. So you have to remember that. To the flip side, you know, we're trying here, and if we fail this somehow, 40.38, you know, we come in here, make a lower high, and somehow start losing the grip, and lower time frame starts to lose it. I mean, as it is now, if we take out the overnight lows around what 39.92 or so, I mean, that's going to put a lot of short-term pressure on this, and on that back of that pressure, if we take out 39.40, well, then we could have a potential down leg into early part of December.
Mhm.
So the reason I wanted to do even a little bit of a short show is to say, listen, we're kind of at a pivot here. If we break and pivot being 4038 being the key level to watch. If we get above that, we could have a run up. And if we fail that and pick up momentum to the downside, then we could easily go in for a deeper correction, which we haven't really had on this leg. So that's what I really wanted to share, right? Because we talked about this high a lot, and it's really good to see in real time what happens. Like, if we didn't talk about it, we'd forget about that, right? And most people would just focus on this new high. Okay, what's happening here?
Right.
But the way they unfold is you got to remember where the markers are, and then you have to kind of try to bracket this thing to figure out the next leg. And now, now we know what the levels are. Anything you want to add to that, Ben?
Just agree with you that the levels are going to dictate what happens, and with that cycle that came in this weekend, it's also another marker. Now you watch, support and resistance to see which one goes, and then you can see the effects of the cycle.
Right. Yeah. And here's the weekly S&P. We talked about this 38.96 a while back, and you can see last 3 weeks we're well above that, right? And if you take the square of 52, we have about, let's say, 39.80. Let's see, what is it? 39. Let's say 39.75, and we're holding above it so far. And so basis weekly, if we can hold above 39.75, I think we talked about this last week before. Well, we have to, definitely have to respect that. That means we could open up for another run up, maybe 52 high to high. But so anyway, that's the sort of the lay of the land, and not to get caught up in all the news. So the key thing here is this 4038. And if we take out this 90 level we just talked about, or if we get downside pressure here, taking this out, that would set up a bigger correction. All right. That's really the big topic for today. Let's look at bonds. Let's do a quick leftover run here. Bonds are running up. We got above the 270 degrees. And we talked about that. Getting above that would be bullish. It's going to go up and at least test 132, and we're kind of hanging in there. I mean, there's a high here that we got in at the quarter square. It's around 129.5. So we could bump around here or go higher. For now, it's let it go up and finish off, and let's see where it finds resistance. Not much to say. But, let us not forget, right? The big trend is down.
Yep.
And like here, down. It would have been nice to see this 144 square come in and to finish off that leg. But the fact that we're rallying up into it tells me bonds are not done. And we're probably a long ways from being done, because the next time we take out 144, we're probably going to get stuck under it for some reason. So we'll see how that works out. But this is, I'm looking at this as a sort of a basic counter trend rally, since the low really didn't come in on a good cycle. Let's put in this. Getting up to the quarter of the square would equal, would have equal legs. So that would be definitely the level to watch. See what happens there. Move on to
bonds are supporting the temporary deflationary wave thesis right now.
Man, it's amazing how the narrative tries to curate. So what's happening in the charts. Yeah.
It's very funny.
Never ending movie. Crude, well, we tapped our support 73.50. There it is, and there's a low so far. And I would say, this is a fairly good support. We've had it, we've been watching this level for a long time. And if we hold it, we're probably going to consolidate between 73 and 83. Very convenient $10 band there. But if we take out 73, I think we're going to go for a decent flush before all this is said and done and get everybody, you know, on the wrong footing. So I think that's in the cards, and that I wouldn't put it past not getting to 60.
Right.
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 And you can see, if you look back, we've had this 60 marked off, you know, back in the days when we're going, you know, trading the long side, right? We had all this, and you can see once we got above 60, it was bam, 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 right to the highs.
Mhm.
And now we're sort of winding it off. And also we talked about the circle, breaking the circle. Ideally, what happens is we get a good explosive move out of there. And the fact that, you know, that fizzled out, right? We had this one leg, came back, okay, second leg, false break.
False break.
That was the sign. Like, hey, this is something different. You know,
Mhm.
came back, one day pullback, okay. Taking that low out was a second, not a yellow flag, now it's like a red flag.
Mhm.
And we took out this low, and a lot of people, I think, you know, you can see how we took it out, reverse immediately. It looked like it was a false break, but boom, came back down again. So
Now
all
we're
of that
lower.
price action tells me, you know, we're not done with this, even
Mhm.
though we're on support. So either we're going to consolidate and spend some time, burn up some time, or we're going to probably take this out and go for a flush and check out the 50%.
I
But
mean,
anyway,
until we get above your 144 there, that full square at 144, it's in trouble.
yeah, in the big sense, it's I just can't see oil getting into too much trouble, but out of favor temporarily, right?
Short term.
Yeah, short term. And I think it's going to present some amazing opportunities in the coming months. So let's just
Agreed.
watch this closely, and these are the levels.
Mhm.
Looking at the weekly crude, you can tell we cracked the level, right? So we had 45 degrees down, right around 78. And, you know, last week couldn't do it. This week, here we are.
Yeah, we're getting our first full bar under 45.
Right. Hey, I just noticed this trend line I had in place. Be good to update these things once in a while.
Mhm. Coming to test.
Hmm?
Coming to test it.
Yeah. So it looks like, you know, I mean, that would be if there's no flush, right? We just kind of hang around here and pick up some speed. But if we take that out, boy, you know, then we have some other things to deal with, including opportunities. So I mean, 60 that we saw on the daily would come in right about here. So that's 5/8
Mhm.
of the square. And that's a good spot. So you know, we'll watch it. For now, it's weak. And I don't know. It's probably a little too shallow to be shorting this thing, but we'll see. Because it's on support, right? For one thing.
Mhm.
Looking at gold, well, we came off the support area that we had, went right up into the square, came back and touched on the quarter square. 1730 is the key level we need to hold above. If we can hold above 1730, get through the square here, and you know, it's all uphill from here. So
Mhm.
and 1814 and all of that, then we can probably move higher. For now, under the square of 72, you know, after the square and everything, it's a little bit soft. Not much going on there. And the weekly kind of shows how we, you know, we got that bottom, right? We called that out nicely. That came in, and we had a nice move out of that hole. And you know, didn't quite get through 1767 basis weekly, but we're well above the 180. So it's in safe, I would say firm ground basis weekly. So the 1695 or so is the key, because that's 180 degrees up from a major low in the past that we looked at. And so it's kind of in a holding pattern. It's not as weak as it was down here. So it's firm. But we need 1767 taken out for it to really get rolling at this point. Copper, I would say, you know, we had a couple of levels here. 330 was a level we were watching last few months, held it pretty well, went up to test the square. Pullback is very good. You know, we came up, we're sitting on top of all this,
Mhm.
this big consolidation, couple of months. So I would say it's firm at this point. Let's move on to the weekly. So weekly, we can see we clearly have a, well, I would say a sloppy uptrend,
Mm-hmm.
but it's holding, right? So we can't really complain. We're held above the 90, which was the key level we were watching. The fork that we had before these lows came in is holding. So the general direction seems to be up on a weekly basis. And I think this could be traded little by little.
Mm-hmm.
Not blazing at this point, but not frozen either, right? So it's okay. Dollar's been sort of the best, I guess, the most active chart last couple of months. We had this high come in, lower highs. You know, if you guys want to catch up on all of these, you can look at the last few sessions that we had. We put a lot of time into the dollar, so not much to cover today. From last week, since not much happened other than bouncing off of the 107 area, couldn't really hold above it. And what we were looking for initially was for it to do a dollar to do a false break here at this level, around 104.5 or so.
Mm-hmm.
And we'll see how that goes if that happens. But for now, it's still in a corrective mode. Not much to do. And here's the 72 square coming off the high. Not the most sort of bullish bounce off of it, where we're starting to leak through it a little bit, you know. So I would say it's not ready yet for an up leg. Let it finish. I mean, there was a 90-week high that came in, so you know, let it finish up. They don't finish up that quickly.
Mm-hmm.
And speaking of the 90-week, here's the square that came in beautifully, and this correction seems very normal.
Half square pullback.
Yeah, so that's what I was gonna say. You know, if we held above that 107, we talked about, that would have been really, really sort of bullish.
Mm-hmm.
At worst, you know, this 106 area, half square would have been nice. The fact that we're sort of getting sloppy around that and getting a little lower, you know, I don't think it's done yet. So maybe a little bit lower to go.
Mm-hmm. I mean, all this fits, all your view on the commodities is the same thing I'm seeing, which is they're probably not done. There's probably one more push lower, you know, this deflationary scare, whether it's based on demand or,
Mhm.
you know, or whatever reasons they want to come up with. It does look like there's another push lower, or at least just sloppiness in the commodity complex for a little bit.
Right. And you know, looking at the longer term cycles, looks like they're both gonna sort of finish this correction at some point and finish the job, right?
Exactly. Still very bullish long term on them.
Yeah. For now, let's just I mean, this is good. We had a good run up, and here's the correction. Let it finish up. So the point there was, since we use these squares a lot and trying to run a little bit of education thread through here, because didn't stop cleanly above it, you know, so it tells me it's sloppy and it's probably not finished with the correction yet. Like here, you can see we got through the 90, you know, with a blast, right?
Mm-hmm.
Came back. You can see the correction didn't even get close to the 90. It was way above. So that's very bullish. I mean, that's sort of a given, right?
Yeah.
So that's kind of how you can measure that. Euro doing pretty well.
Pushing.
The last hurrah. So, yeah, we had that low coming. Well, that 90-week cycle in the dollar, obviously it affected the euro, and you know, we came down 288 degrees basis square 72. So not like we didn't see this low coming, and we were expecting, you know, if it was weak, it would have stopped here and turned down. Next spot would have been a 216, another square up, full square up. So here we ran through that square. You know, we were 3 squares down, got on top of it, and you can see how the test held above it, right? So
that was perfect.
Yeah,
that's a classroom right there.
Exactly. And the reason I try to keep all these themes the same is it's easy to understand the charts, then it's easy to read these. So you can see how we blasted through it, came back, didn't slop around below the square, right? We bounced right off the square. We're hanging in here. So in here, there's a little bit of I would say kind of a balance point. Let's see how it works out. Since the dollar looks like it has a little bit more to go to the downside, I would say, euro probably has room to go up and check the 106 area for resistance. So we'll leave it at that. And here's the weekly. It would be perfect if we can get up and test this 90.
Mhm.
And that's right around 106, 105, 9, 106, right in there. And so there we have it. So it looks like euro has a little bit more to go. Dollar has a little bit more to go. And everything sort of adds up. So we'll just go with that for now. And S&P, we kind of know what to do here. We're bracketed in here. We need a break and keep this cycle in mind that came in. That's all I got for the leftovers there, Ben.
Yeah, that's it for the leftovers. They're tasty, but we'll need to come back to this, with our regular show, and we'll do a full show, full review. As I said, with the commodities, it does appear we're looking at a temporary deflationary wave for whatever reason. We'll find out the reason after it happens, but that's what the charts are saying. So,
right. So next week we'll come back with a fresh menu. Right.
Yeah, we'll have a fresh meal, new show
Yeah.
with everything. We just wanted to give you this quick review to start the week out, and then and we'll check back with you this coming weekend with a full show. So have a great week trading, everybody. It's a busy week, a lot of economic indicators. Powell is speaking on Wednesday. Unemployment is Friday. So it's going to be a decisive week price action wise, we believe.
Right.
So let's see what happens, and we'll talk with you over the weekend.
Thanks, Ben.
Thanks,
And
Ben.
you bet. And you guys, if you guys like our work, please remember to click the likes and the alerts, and also to subscribe. That'll help the channel grow and get more people to
Encourage us to do more stuff.
yes, and also to open up a window into looking at charts without, half a dozen indicators on it, and really look at price and cycles, keep it a little bit pure.
There you go.
Anyway, all right. Have a great week. We'll see you guys next week.
Thanks. Bye.
Bye. Okay.